be.
Hi, everybody. Today we're joined by Mel Curwood, a financial coach who works closely with business owners to help them get back in control of their money, especially when things feel tight.
We're talking about something a lot of bookkeepers are seeing more of right now: debt, cash flow pressure, and how to support clients through it all in a practical way. Mel, it's so good to have you with us. Do you want to kick things off with a quick intro?
Hi, everybody. I am Mel Curwood, and I am stoked to be here with Sandy and Ken and talking to all of you. So, thank you all so much for having me. I have been working on the cold front of non payment and credit control for the better part of a decade. And I'm super excited to be able to take all of those learnings through the roller coaster ride of business and now help bring it into the space for you guys,
Not just business, right? Personal as well.
business and personal. One hell of a
Good.
roller coaster ride.
I'm hoping
Yeah.
to get some tips for myself here out of this one as well.
Perfect.
Yeah, no, for sure, for sure. All right, so let's get started. So, Mel, I'm just wondering,
Mhm.
what drew you into financial coaching in this space?
So I come from a family of business owners. My parents are business owners. They are upholstery um, refurbishers and curtain makers. And so they were always in business. And I strongly remember coming home as a kid and my mum, this is before you were probably even born, Ken. Back,
What about me?
oh, and Sandy, sorry, that was very assumptuous. So back before they had computers to do their bookkeeping, and it was the old fashioned lines on paper,
Mm.
and just the kitchen table being covered in paperwork, and this paperwork was like a weight around my mum's neck. She went to night classes to try and learn bookkeeping, and it was one of those situations where she was great at what she did, but not great at running a business. So it taught me a lot about owning your own destiny and doing things your way, but it also taught me about the pressures that can happen on a family where there is an imbalance. I've also always loved business owners, and so over the years, as I started working in different roles in the finance realm and then working directly with business owners, I became more passionate about becoming a business owner myself, which I have been for nearly a decade, and working side by side with business owners to help them get the very best out of what they're trying to achieve.
Isn't it interesting that, so in your family situation, assume your dad was the lead upholsterer here, and your mum was the wife, the missus at home who'll help with the book?
Mm.
Other way around.
Oh, was
Yeah,
it?
so very much so. My
Oh.
mum was the upholsterer because she came from a sewing background.
Mm.
So yeah,
Oh,
it would be my dad would they would definitely be side by side helping each other. There's a lot of heavy lifting and mechanics new pulling apart furniture, but yeah, neither of them were great at the books, and they're both more hands-on people. And that's yes, you're right though. It does tend to be the stereotype is that the gentleman in the
Mm.
household is the one doing the hands-on work, and it's the mum who also works full time who's then coming home trying to manage the family and do the bookkeeping. Yeah.
well, yeah, the reason I brought that up is because, well, for me personally, that was my situation as well. My
Yeah.
husband was working as a sole trader bricklayer, and his answer to any question was ask the missus,
My
and then
God.
I would have to find the answer. So for me personally, it's relevant, but also we find that for a lot of bookkeepers, that's how they've
Mm.
fallen into bookkeeping
Yes.
because they did it for their husband,
Hmm.
my parents, someone in the family, and they
Yes.
found that they loved it, so
Mm.
kept going with it. But actually, I really like that spin on it, but
Yes.
same but different.
Yeah, exactly.
Yeah.
Fantastic.
Also, I kind of picture I imagine the shoebox full of receipts was still the same back then
Yeah,
in your kitchen table.
100%. Yeah, 100%. And it was genuinely it was, I think, chaos, and it's something that was just constantly weighing on her mind. And I think
Mm.
it's weighs on the minds of whether you are the wife or the person at home who's supporting the primary business hands-on operator. It still can feel like it takes up way more of your bandwidth than it really should. I mean, human beings weren't meant to be on like that 24 hours a day. So the more tools we can give people to reduce that bandwidth extension, then the better off they're going to be.
Before
Yeah.
Ken moves on to the next question, Are your parents happily retired now?
They are happily
Oh,
retired.
good.
Yes, they've moved to the South Island and got away from everything. The best thing they probably could have ever done. So, they're happily living down South Island.
No more
Nice.
business owner receipts, payment issues,
No,
living their best life.
exactly.
Yeah.
They are at last.
Yeah, good on them. All right, Mel. So, what's something people often get wrong about debt?
Okay, so let me just take a brief moment here to make sure as we mentioned, I've pre-captured some notes. So I want to make sure that I touch on all these points. Um, Okay, yes, good one. So, for the first 8 years of my role in credit control and debt prevention, I was working in partnership with a New Zealand-based company called EC Credit Control, and they're a debt collection agency. So we saw it when everything was at its worst, when people had non-payments. So we can talk more about that. But one big, massive misconception is that sending something to the debt collectors is a magic bullet. So, we think that that's the ultimate stick that we have in our back pocket when it comes to dealing with non-payment. But the reality is that the New Zealand legislation around debt collection is heavily set up in favour of the debtors, so the people who are not paying the bills. What that means is that it goes to a debt collection agency. All they simply have to do is say, I dispute that. And then all debt collection processes have to stop and it goes through to a resolution process. And then even if they can't get hold of them and there is no dispute and it goes through a court process, the courts can say, yes, this officially is owed to you. Off you go, now pay that debt. But that doesn't mean that the person who is officially now owes that money is going to pay it. You have to then go back to the courts to get it legally enforced. And at that enforcement stage is where they will take it out of their wages, out of any assets that they have, or post a bankruptcy question.
I feel like my mind just blew then. I feel like I kind of knew, but didn't know that.
Yeah.
So you can get the judgment against someone,
Yes.
but if they don't pay that, nothing happens.
So yeah, you have to then go to an enforcement.
And then if they still don't pay from there,
Yeah. So this is the
you just
thing, which we'll dive into, is the only real debt prevention is to not provide credit, but it's a journey to get to that point in time. So
yeah.
Yeah.
we'll get to that point in time. The other thing as well is it's getting harder and harder for debt collection agencies to even do their job. So in Australia, in some cases, it was seen as harassment. They have to be very, very careful with how they collect that debt to be seen as not
Mm.
harassing people. So the point in that particular note was that debt collection is not a magic bullet. Yeah.
Yes.
So you mentioned working with EC Credit Control.
Mm-hmm.
Was that so 8 years? So I assume you were there during COVID
Yeah.
times.
Yes.
Did you guys see any change?
I think like everybody, there was a degree of normal from I started with EC Credit Control in 2018. So there was a degree of normal in the world until COVID hit. There was a massive brakes were pumped on anything to do with debt collection and non-payment, so we could not collect.
Oh,
Just
Oh.
like the IRD couldn't enforce any period, they couldn't enforce any penalties. They also couldn't put anybody into liquidation. So what that did for as a repercussion of that, and you can see it
Mm.
was for compassionate reasons, but as a result of that, what actually happened is all of those people that were in a holding pattern, because it was inevitable, then all kind of hit the fan starting from 2023, where they could start to really reinforce some of those.
far out. I feel like
Wow.
that's
Okay.
I was just talking to someone earlier
Mm.
today. Um, obviously school holidays has just happened. I've got two young primary school kids.
Mm.
And it feels like everything stops for 2 weeks. And then all of a sudden on the Monday, everyone was like, have you done this yet? Have you done this yet? And I'm like, oh my God, totally just sat down. Yeah, you kind of almost like that's a mini pause, right? And then a
Mm.
restart. But in terms of that's huge, like the whole country.
Yeah, yeah, and
Yeah.
so you're right. That was just one. That was one small component of what we saw, is that enforcement of not being able to collect, and then the subsequent flow-on effect once the dam was burst. And
Mm.
then where that's now landed us in 2025 and into 2026. So that's one component. but there's multiple components as well.
I see.
Good
So
time.
now, yeah, and so Mel, can you just please give us some insight then? Do you tend to work more with businesses in crisis or those trying to stay ahead?
So, because of my role working as an independent contractor with EC Credit Control, predominantly I was working with a client base who had experienced a non payment, meaning that they are seeking help. They're seeking some kind of resolution to get their money back. So often, and then working with the same businesses. Luckily, gorgeous, amazing customers that I got to work with through second and third generations, birthdays, marriages, the whole lot. And so they knew that they could call me whenever they were in crisis. So it was reactive, so businesses in crisis, but also once a business has been around for any length of time, the majority of them are going to have experienced either a non-payment, they're going to have had a near miss, they're going to have experienced disputes or delayed payments, or they know somebody that does. So oftentimes they know they've been lucky and they want to protect their risk in the future, or somebody that they know has been devastated and they want to make sure that they're okay. So there is definitely some preventative thinking out there, which is what we want to educate for,
Mm.
but also there is the reactive crisis mode, which people come to me for, and they know they can have somebody that's going to be there on the other end of the phone.
Do you
All right.
find that you've gone from being the ambulance at the bottom of the cliff to the barrier at the top for some of them then? So obviously they've come to you when they're already uh, in that situation.
Yeah,
Mm.
100%. So in some instances, it's some one or two simple tweaks can make the difference in their entire business infrastructure. For others, yes, we get the infrastructure sorted, and that's what becomes their roadmap. Business is organic. Business is a beast of its own, and as is our economy, it's not static. So it's not like you learn a lesson once in life and then you're never going to face a problem or any variation of that ever again. It's continuously changing and evolving, and the challenges and expectations and legal changes and all of the
Mm.
different things that are part of life will impact what comes up freshly for these business owners. But yes, we get the
Right.
foundations right, and it gives them a lot better position to work from.
I see.
So
So
what do
Mel, what are
you
you seeing?
oh,
Yes.
oh,
Yes,
you
I'm
go.
just wondering.
Mm.
Yeah, what are you seeing right now with the small businesses in New Zealand?
So we're coming off the back of, as we said earlier, that repercussion of the COVID and post-COVID environment.
Mm.
Again, one particular aspect of that was the pause that was put on all of the non-payments and chasing and liquidations, and then the dam burst on that. Last year, we saw a huge amount of liquidations in the marketplace. The IRD in particular, they get to a point in time and we may see another resurge of this coming year, where businesses are unable to keep up with the penalties, or they're not able to meet their minimum commitments to the IRD, and the IRD gets to the point in time where they put them into liquidation. The difficult situation is that the transparency over whether or not somebody owes the IRD 100 grand or $1 million is not accessible to business owners. So I might run a credit check on a company before I take a project on board, and I might not see that they actually owe the IRD $500,000. And then the IRD are the ones that put them into liquidation. And then the IRD are the first people at the top of the list to actually get paid. So it's really important that, yes, we still continue to do our due diligence, but that we also understand there are other mitigating factors in the background that we can't always see.
Do you find sorry, excuse me. Do you think that like a lot of these things that obligations that the businesses can't meet at the moment are a flow on from COVID? Like I'm just thinking, so in terms of like a personal household, right? Like it feels like at the time of COVID, everyone stripped their expenses back, and no one's ever really got back to the point where you can kind of bring those things back in. So do you find that businesses would have stripped back at that time, but then to keep
Mm.
operating, they need to keep
Yep.
having expense, right? So
Yep.
is that liquidation kind of a flow-on effect from expenses during that COVID period, do you find?
No, in fact, in some cases it would be the opposite, because you have to remember that directly during COVID and after
Mm.
COVID, there's a lot of money that was paid out into the economy and people weren't traveling.
Mm,
So we actually had a
true.
mini financial boom immediately post COVID. But you're right, it's the landscape hasn't been the same since, and the complexities. There's a lot of ingrained aspects
Mm.
that were a problem before COVID. They just didn't come to the surface until COVID and post COVID. So this is when we talk about the entire landscape of how businesses operate and fundamentally get paid. So yes, there is the ongoing ever-evolving scenario around the cost of living, around expenses, and particularly with diesel, which we'll come to talk
Mm.
about. But I think there was definitely a before time and an after time, but whether we ever get back to that normal. But
Mm.
fundamentally, regardless of COVID or not COVID, there is a shit ton that was not right in the way businesses were operating that is invalid as to what's going on financially in terms of a financial crisis. So that's what we can control.
Do you know, I
Right. So
feel
I
like, I hear, you hear the same, "Oh, when COVID happened, it was like unprecedented times." And I feel like every year since then, we hear the same words like cost of living
yes.
crisis, epidemic, pandemic, something's happened, and we've never gone back to, even though it wasn't perfect at the time, but
Mm,
we've never got back to a time where we could just relax and not
Mm.
have the next, ordeal right
mm-hmm.
on our doorstep.
Yeah. Yeah. Well, the
Yes.
climate has changed. So the
Mm.
literal climate has changed, environmentally speaking, with all the
Yes.
weather and things. And also the economic climate has changed. It was all, but there again, so there was already fundamental issues that were very historical, which are now just coming to the forefront. So as we say, both in business and in the broader climate. So there's two of it, and the other aspect is if it's reported a lot more. So whether it's
Mm.
the weather issues are being reported a lot more, and they are a lot more chaotic. So both things can be true at the same time. So in terms of this new normal, this is where we could need to go. Okay, well, we can't just wait for things to magically go back to the way
Mm.
they were. This is where we need to understand what was already wrong, what lessons came to the surface, and what can we change so that we're in a much better position so that no matter what life throws at us, our business is stronger.
I'm kind of team, can we just go back for a little break? Like, just to,
Yeah.
like, maybe can we just go backwards for a little bit just so we can have a little rest and then fix everything after?
Yeah, but
Like,
I think probably like just that in itself talks to the demand on our bandwidth. And so what we need to be able to do is to, and I use this word a lot, for a reason. And that is, there's a
Mm.
lot more that's within our control than we realize. So what we're doing at the moment is we're operating in fight or flight. We're operating in a reactive state. And so you're operating from your hindbrain, not your frontal cortex, which is your reason, your logic. So when you're constantly in fight or flight and reactive mode, you do feel like you need a break. Whereas when you're operating from a state of using your frontal cortex, you're able to see, plan, and to strategize the best practices for yourself moving forward. And that's where you guys step in and where I step in to help people get to that state.
I love that. Are there
we can
any
try.
common? Yeah, we're gonna try. Are there any common patterns when it comes to debt and cash flow pressure, Mel?
Okay, let's have a look. I'm just going to look at my notes again. Bear with me because I captured a lot going on here. Common pressures. Yeah, everything's fine. This is
See,
a common thing.
I want to live in that world where everything's fine.
So this is one that comes up periodically, but it's also it is common is that everything's fine until it's not. Do you know
Mm.
what I mean? I spoke to a business owner who had been in a business of 30 years and never had an issue until it was a $500,000 issue, and then COVID hit. Yeah.
Oh my
Oh
gosh.
wow, yes. When it rains, it
um,
pours.
it does. It does. What else are we saying here? Um, So a lot of businesses that are in that situation who said that they never had a problem with non-payment, the common thread here is that they are now seeing issues with non-payment and slow payment that they had never seen before. So that's a common situation. Um,
Can I just go off on a tangent here
yeah.
on that one? I So, like, I don't know if we were going to talk about this one later on or not, but payment terms.
Hmm.
So, in New Zealand, historically, 20th of the month was the payment date, right?
Yeah.
Um, and I know that a lot of people are like 10th of the month, 7 days kind of thing, like
Hmm.
trying to work into that now. Well, this morning I had a conversation with a lovely friend of mine who runs a business.
Hmm.
She's a merchandiser, so
Mm.
it's high expense, I guess. So she's invoicing her clients for the products,
Hmm.
and she has to pay that amount to the supplier. And she was telling me this morning, if she's listening, hi.
Hi.
um, I won't name her.
Hmm.
So she was telling me this morning that she's she does all her payments on the 20th because that's just normal, right?
Hmm.
But one of her customers, she rings them to follow up their invoice. They're always late, and they're like, "Oh, we don't pay until the 30th." Like,
Hmm.
and so she was like,
Mm.
"But my payment terms are you pay me on the 20th."
Hmm.
So I guess like
Yeah, perfect. What you've
it
said is
was,
perfect. And it actually does tie back into this original question, which was
Mm.
mm,
around what are some of the common things that we see.
Yes.
So, one of the biggest things that we see is the inherited power dynamics. So, something that's really important that I talk about in my accelerator is understanding that there is a structure that's taught in economics. Which is essentially where the biggest companies utilize the smallest companies, so their suppliers, as their cash flow. So this happened in New Zealand in Fonterra. So with Fonterra, which is our biggest global company, they were at 90 days with a lot of their suppliers. And so until public pressure came on and government pressure came on, they were expecting for business operators to go in and provide services, materials, staff into a job and then hold that credit for 90 days, which is 3 months free money. And it's not an uncommon strategy or tactic that the biggest companies will use. And in fact, this is where, Ken, we bring in that global perspective, is that it's recognized as such a huge problem that some years ago, the government tried to enforce legislation to make the biggest companies basically accountable for how
Mm.
quickly they were paying or not paying. However, that never made it into place. It was actually retracted before it was able to be put into place and replaced by a goodwill gesture that local bodies pay faster. This is not uncommon. The long tail payment problem is global. And in the places like Australia, some of the states in Australia and in the UK, they are required to report how quickly they pay.
wow,
Hmm.
Wow. Yeah.
that's kind of like, come on, government, put that in place. Because, like, in my friend's situation, she was like, her argument was, well, if you're not going to pay me till the 30th, then I can't pay other people. Like, you've got this domino effect. Like, I can't change my payment dates to suit you
Mm.
because if I don't pay my supplier because you've not paid
Yes.
me, they're just not going to give me anything. Like,
So
it's just,
New Zealand is this big.
yeah,
And
but it's,
we are very tightly interconnected. And whether there's a liquidation or a non-payment, all of the everything just gets passed down the line. I can't pay you because I haven't been paid, right? And so this is why what we're talking about here is so critical, not just to the individual business owners and to the bookkeepers that are supporting those business owners, but it's really, really critical to our entire economy because we cannot afford to have another 2025 or
Yes.
2024, 2026. We just can't afford it. And when you look at the fact that New Zealand is 97% made up of SMEs, if we all got together and we started to say, we're not doing business this way anymore. The thing is, I use this analogy, the bigger the gap between you putting your time, money, resources into a job and getting paid, it's like you're on a pirate ship and you've got this plank out over the ocean. And the bigger the gap between you putting time, money, resources into a job and when you get paid, the further out over the ocean you are with the sharks swimming beneath you. It's a bigger risk. So what we need to do is get businesses paid with offering less credit, getting paid faster, so we can reduce that risk.
do you feel like, so obviously we're in this vicious cycle of inherited thinking in New Zealand. Do
Hmm.
you think it's the same globally as well? Like,
Hmm.
is it?
Yes.
Well, do you
Again,
see that, Ken?
no,
Like,
it
do people do
is.
that in the Philippines?
No, it
Oh,
really
they just
is.
don't pay. They just run away. No, just kidding.
Yeah. No, but it really is. It's one of the worst countries for it is actually South Africa because there's a lot of corruption. And I can't speak for every single individual country, but it 100% is because of where the 20th. Do you guys know where the 20th of the following month comes from?
No.
No.
Okay, so and this is what makes it a global issue.
Mm.
So in the olden days, Sandy and Ken, before you were born,
And before you, I hope as well. Like we're talking a long time.
as I said, they used to do manual bookkeeping and manual accounts. So what the business owner would do is they would do all their business reconciliation, whether it was weekly, whether it was monthly, and then they would go ahead and send a manual invoice to their customers. The customers would then sit down and do their manual invoicing reconciliation, write the check. Do you remember those? Did you have checks? Do you know? Did you know what a check is, Ken? That would
I
go
remember my mum sitting down and balancing her checkbook
the
and
checkbook.
like stapling the
Yeah.
check
Yes.
to
It's
the
just-
remittance advice and posting it back.
And then,
Yeah.
so what would happen is
Interestingly
that
enough,
then,
they still use checks here
yeah,
in the
so
Philippines right now. Yeah.
so then the check gets written, then it gets sent back by snail mail. The administrator or the office person, whoever that might be, receives that money, tottles down to the bank, deposits it in the bank, and then waits 3 to 7 days for that check to clear. So that is where the 20th of the following month comes from, because it physically took that long in a manual cycle for us to get paid. And we've just kept that inherited cycle. So it became ingrained in the agricultural sector. So then the farming becomes a big influence, right? But ultimately that's where it comes from. And if we can get money overseas overnight, and if we've got all of this software and AI that can generate
Yes.
things so much faster, there is no excuse, no real excuse, other than it's become entrenched in our habits and practices, that it has to remain that way.
I'm a bit impressed. Like to get snail mail to me nowadays, like I only get post delivered 3 days a week, right? Like everything was more efficient in the post system back then for that to fit in a 20-day gap. Because if someone posted me an invoice now on the 1st, I probably wouldn't get it till the 10th. And if I was relying on posting it back,
Mm-hmm.
because they've reduced the amount of postage days or delivery days in New Zealand, like it wouldn't even fit within the 20 days.
No, not at all. And that's why it's a global problem,
Mm.
because
So Ken,
yes.
are you paying your bills in the Philippines by check?
No, we don't. We do in the Philippines. We actually have QR codes. And it's more efficient than the New Zealand banking system, because in here, when you pay bank to bank, you receive it immediately. It doesn't matter if it's a different bank account. So you get it instantly. And I think they call it instant transfer, something like that. I don't think we have that one in New Zealand yet. So yeah, there are some things that are not so good in the Philippines, but there are actually some things that are more advanced here than comparing it in New Zealand. So, for example, when my husband tried to buy his car before from someone, they did the transaction via Trade Me, and then he actually had to go to the seller's place. And because he was ASB and the other person was ANZ, like my husband literally had to wait for 3 hours before the payment comes through, because, like that guy just wanted to make sure that he actually paid. Whereas here in the Philippines, like for example, if I need to transfer money to you right now, you'll get it immediately.
Yeah. So there's no excuse for ultimately
Yeah.
whatever the new technology is. There's no there's no real reason for it. So that's where we kind of we kind of going to look at what's inherited, what's just things are just the way they are. At some point in time, whenever there is any real change for positive good, it takes people coming together and having a collective voice and just not standing for something anymore and being like, this actually is putting everyone at risk, that I can't pay you because I haven't been paid. And then one person up here goes into liquidation or whatever happens, and then that breaks that whole chain. Like the devastation, it's like dominoes. Doosh, 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 doosh. Like we just can't afford it.
Yeah.
I
But
just
then
want
there's just
to throw something out there and tell you guys that I actually have a checkbook. I worked in America for a couple of seasons as a camp counselor,
Yes.
and the first year we were there, they used to give us cash checks, and in the second year they changed the rules, and we had to have an American bank account to be able to get our pay. And so all the international counselors toddled off to Chase Bank, I think it was, got our bank accounts, and they sent us a checkbook, and I was like, I don't even know what to do with this. Like, and then you go over to Maya and you pay by check at the electronic checkouts, and you're like, "What the heck?" So, because it was such a novelty, I kept it and I still have it in my,
Yeah,
camp
souvenir.
mementos. So
Good for
I have a
you.
checkbook.
Yeah. Yeah. So
Good for you.
I
so
might
Mel,
try and write it yet.
yeah. All right, Mel. So you've mentioned, right? Like some of the pushback is just like I haven't been paid, so I couldn't pay you. But now like we also have things like fuel costs, inflation, and cost of living. So how are things like these actually showing up in business numbers as well?
Okay, so one of the things we see, and I've got my notes on this here, so if you see me looking away, that's why, is
Go for
the
it.
is the reduction of disposable income.
What's that?
So 100%. That again, so this is why it's a big conversation, because it is complex, and one component of that is the reduction of disposable income, but the other of it is our mindset around the self-fulfilling prophecy, which is often can be, people might say it's generated by the media and what they choose to focus on, but what that then means is that people aren't spending. So yes, they may on one hand have not have the disposable income, but on the other hand, they simply are not spending even if they could. And we see this happening in an election year, so there are just these psychological things that give us reasons to not spend even though we could. So fuel costs, inflation, cost of living, people are putting projects off. I mean, even when we had a change of government, a huge flow on effect came from the number of infrastructure projects, like major projects that were put on hold. So, if I've got a hospital refurb that's been put on hold, those big contractors who had employed a bunch of staff to do that job now have to keep their teams. So in order to keep their teams, they now start playing in the backyard of our SMEs. So, and at a reduced cost to win that job. So then you see entire industries like the electrical industry being completely bottomed out and gutted because they can't compete with the biggest companies who can do a job at a loss just to get the job to keep their teams going. So it's nuanced, and it's complex, and it's multifaceted.
Mm. So what's
Can
the difference
confirm.
between normal pressure and when it becomes a real issue?
So let me just have a quick look again at my notes just to make sure I'm capturing what I wanted to articulate. First and foremost, it's highly subjective.
Mm.
Each of us, we're all individual human beings, and therefore, when you have a human being operating a business, every business situation is very, very different. You have some human beings for whom running a business means operating in fight or flight mode all the time, continuously chasing non-payment, and that's just what it means to be in business. That's their norm. We know that's not reality, but in their world, that is their norm. But when it becomes a real issue is when it's starting to affect entire sectors. So, like
Mm.
I talked about earlier, we talked about fuel prices, right? So, cash is the blood of our economy, right? It's what keeps businesses going. But trucks are the bloodline of our infrastructure. And so when you have such a huge cost on places like diesel, what that means is that the margins for the truck drivers are massively squeezed. And so what that means is their truck breaks down, they go to the heavy diesel mechanic because they need their engine repaired, but they can't necessarily afford to pay that bill. So then they have to get back on the road and start earning the money to pay the bill because that wasn't necessarily an expense that they had expected to pay. The other thing is that they may potentially not do their warrant or whatever the certificate of fitness.
Yeah.
Yeah, because the fine that they get charged is cheaper than the cost of getting getting their vehicle repaired, especially if they know that there's something that's going to need to be fixed. So it drastically can impact entire sectors, and that's when it becomes a real issue because we are such a close-knit community.
So, my dad is actually a long haul truck driver.
Mm-hmm.
So he drives from Auckland to Wellington, and he does a trailer swap with the guy in the South Island. I'm sure he's a lovely guy.
Mm-hmm.
So my dad used to do that trip for $600 in
Mm,
diesel, it's now $1,200
mm,
one
mhm,
way. So, we like, for me, the first thing I think of, so my dad's been a truck driver my whole life, right? And I know that that's connected to the grocery prices. So if the transport companies are now having to charge double to recoup their diesel costs, then it pushes the groceries up, right?
mhm,
Like,
mhm,
it has to it gets passed on
mhm.
to the little people.
Mhm. And that's why we talk about it. It's there's not a single answer, but there are multiple contributing factors. But because we are I was somewhere recently and I saw a truck company that I work with. They one of their trucks drove past, and I'm like, you see that one truck that represents 5 businesses. So
Wow.
you've got the truck driver that may or may not be a contracted driver. It may be the truck owner. It could be what they're hauling. So it could be aggregate, it could be feed, it could be animals. It's also the tire company. So the company that they pay their tires to, it's the diesel mechanics. So there's at least 5 businesses that are connected to one truck. So if you have one aspect, one variable, which is the cost of fuel, affecting the owner operator's capacity then you've got these other 5 other businesses that are being affected. Does that make sense? So
Yes.
everything is like a spoke in the wheel. Like you take one variable and then the offshoot impacts of that are complex. And so this is why we have this machine that's our economic situation, which requires step by step changing the momentum around because we are so interdependent and we can do so much better as an economy when we start fixing what we can control.
So I feel like, the other thing just on the truck note, like my dad gets really wound up, like really wound up when people come up to him and say, "Get these bloody trucks off the road, you're taking up all the road." And he's like, his thing is, "Well, how are you gonna get fed if I'm not on the road?"
Yeah, yeah.
But also, like, now that you've put that context to it, it's not just my dad that would be affected. Like, if those trucks come off the road, that has that domino effect
And
on
there's
those
another
other.
aspect as well, which I just thought about as you were talking, and that's look, we complain about it, roadworks. Look,
Oh, yeah.
the trucks are hard on the roads for sure, but also our asphalt isn't the same quality as when we had our own oil refinery, but don't let me get started on that. But the
We can book in another podcast for that one.
but the number of people that are employed by your traffic management is one whole type of company. Then you've got your seal and your earthworks and your prep. So that could be 2 or 3 types of companies. Then you have the line marking people that line the roads. That's another type of company. So what are we up to now? From our 5 to 10.
9?
So
9?
yeah, so
Yep.
from that one truck, that one industry of a truck driver. So then you take that one particular example, and then you look at a residential development. So then you've got the trucks. Then you've got the builders, the plumbers, the sparkies, the plasterers. So you know what I mean? So this is when I
Yep.
say we are so integrated with one another. So that's where one liquidation can be like a little micro nuclear bomb going off in one particular economy.
Yeah, I feel like that's saying, 3 degrees of separation in New Zealand, like, you could almost bring it down to 1 or 2, really.
Yes, yes, you could.
Yeah.
Absolutely,
Um,
absolutely, you could.
so yeah. So I feel like, talking of tradies, so, I mentioned before my husband was bricklaying. He actually went and got another job because, we live in Pukekohe in Auckland, and the building just stopped. So no
Mm,
one could afford to, build a house. So obviously, like, the builders were out, the plumbers, the electricians, the bricklayers, and things like that. And I think one of the things I noticed at the time was there was a lot of bookkeepers coming out talking about, getting the deposit beforehand and things like that. So, is that kind of what you see, like how bookkeepers can help the clients under financial
yeah,
pressure, like saying,
absolutely.
twisting
Yeah.
it on its head?
Yes. So again, I have some notes on this. So bookkeepers are so important.
They're
They're
awesome.
awesome. So first and foremost, business owners shouldn't be trying to be everything, do everything. And we touched on it before. So it's the husband and wife team that don't really ever have any break from their business. And then trying to do all things, and this is where you end up with really dangerous situations of burnout for a starter. But also just actually from a financial perspective, if you are so busy that you don't have time to do your invoicing and manage your bookkeeping, it means that you wait until you've got no money in your bank account to send out some invoices, and that creates a whole flow-on effect. So the role of bookkeepers is essentially essential. And what the other reason for that is that business owners can be very isolated. And what that looks like is a business owner who is operating within their own bubble. And when a bookkeeper steps into that world, they are a lifeline. Which sounds extreme, but they are a person that's coming in to listen and to be that sounding board and to create a safe space to talk about what's going on with the business financials, and to actually to shed to highlight some aspects that the business owner might not A, be aware of, or B, be choosing not to deal with.
Head in the sand
Yeah,
syndrome.
exactly. So
Yeah.
it's they work alongside businesses potentially when business owners are at their most vulnerable. So you guys would know that as bookkeepers, I'm sure.
Oh, did we not tell you we're not bookkeepers?
Okay, so
We're
to your
yeah,
audience who
no,
are
yeah,
bookkeepers.
audience. Yeah. Sorry. Yeah, just for everyone out there, Ken and I are the bookkeeper cheerleaders. We don't do bookkeeping ourselves because, it's
But you
more
do
fun
help your
cheerleading.
husband with
Yes.
some of his books.
Only because that's to my financial benefit.
Yeah. Yes. So
Actually, my kids were talking this morning, and sorry, this is so funny. Um, my husband was doing something on his phone, and I don't know what he was doing, but our youngest, who's 7, came up and said, "Oh, I saw Dad was doing something for money, but I forgot you guys both had the same bank account." And I said to her, "No, no, just because Daddy's name is on the bank account doesn't mean it's his money. Like,
yes.
he doesn't even know what happens to it after it hits the bank account."
So
All I
Exactly.
get is, "I'm sure you've got it under control."
yeah, exactly. And so that's where bookkeepers actually another area where bookkeepers
Mm.
can come in, because they're an unbiased third party. Quite often, if you're the husband and wife, you're in the thick of it together, and that creates a variety of different complexities in terms of the dynamic within your relationship, particularly when there might already be tiredness, overextension, where there might be some tough financial times. So sometimes you just don't have the capacity within yourself or within your bandwidth to do what needs to be done for the best interest of your business. So having a third party step in and be that third person,
Mm.
whether it's being the strong, the good cop, bad cop, whether it's being just a sounding board, whether it's providing an outside perspective. Like the bookkeepers are really critical to our business owners, often like the only person who's going to be able to give them that perspective on their financial situation.
We
All
often,
right.
have this joke about bookkeepers being counselors as well.
Mm-hmm.
Yes.
Um, I guess, you could see particularly in that situation where it is a husband and wife under pressure, because
Yeah.
I feel like 9 times out of 10, the wife's doing it because she's at home with the kids and kind of thing. So there's a lot of pressure in those
Yeah.
situations.
100% there is.
Um, with the, bookkeepers playing that role,
Yes.
and just going back to those payment terms, so to me, bookkeepers can really add the value by doing
Mm.
those small tweaks
Yes.
to things, like putting in place the deposits and changing the payment terms. Whether the person on the other side, like, conforms to that, I guess, is a different story, but trying to put those small things in place to help them.
Yeah. And so that's one of the best things that bookkeepers can do for themselves as well, is actually really educate themselves, because
Mm.
there's that saying that knowledge is power. And we have these really key and low hanging fruit that you've just talked about in terms of the strategies, which is to get the biggest deposit possible, to reduce the amount of credit actually being provided, to invoice faster for a shorter due date. Like those are easy tweaks, but it's when they educate themselves to understand the why behind it and some of the other broader dynamics that are coming into the background of those structures, and how to talk to how to talk to the business owners and help the business owners understand how to talk to their customers and set out the roles and responsibilities and expectations at a customer level, then it means that it becomes a reality. It's not just this nice, we'll put it on a piece of paper and hope that people pay attention. It actually now becomes a culture. I have this thing that I talk about where I'm like, you teach people how you do business. You teach people how to treat you in business, just like you do in life. And so bookkeepers, when they are educated and they feel comfortable and confident and communicating for themselves and helping business owners communicate the expectations up front so that it's not something that's happening once the job is done at invoicing time, that we're articulating how it flows, people will rise to that. People will respect that, but we need to provide an environment that fosters that capability of faster money moving through businesses.
Especially
I'm
since the technology is there now, right? Like, moving on from the checks and the post, like, the technology, even though it's not as fast as the Philippines, like, we can do same-day payments now. It might still take a couple of hours,
Yeah,
but
yeah. And
yeah,
the other thing that
there's nothing stopping it, I guess, is where.
exactly, yeah. And another thing that bookkeepers can do potentially, I don't know, I'd have to defer to your bookkeepers, is to actually have the conversation with the material providers. So one of the things that causes delays in invoices going out is that they are waiting for invoices from the material suppliers to come in so that they know how much to invoice out. So again, we're all in this integrated cycle, right? Like cogs in a wheel of a machine. So when we could have a conversation with our material suppliers and find where we can get those invoices and get that information faster, that enables us to then invoice faster. So do you know what? This is where we talk about it being a river, or this upstream downstream. So we have to get the upstream stuff figured out as much as the downstream stuff.
I like that
so Mel,
analogy.
Yeah.
yeah, so how can bookkeepers have these conversations without it feeling awkward or overstepping to their clients? Like,
I think I think it comes back to something similar that we've already talked about, is just how comfortable and confident they are in a broad understanding. So the broader your understanding about credit control and cash flow and risk and the legal requirements in terms of trade, the more organically it can come up in conversation. So it might be a situation that arises and you know how to talk to that particular perspective because you've got that broader knowledge and understanding and confidence yourself. And then the other thing is just as we'll talk about, is knowing then when to defer. And there's whenever you're trying to influence anybody of anything, it's a type of it's a type of a sale, really. And I come from a background in sales, and there's one of the things you can do is use what's called the Jones theory, which is basically saying other people are doing it, so you can too. So it's the trailblazers and the early adapters which lead the path for other people to follow. So it's helping them to feel, bookkeepers that feel confident and comfortable in what they're actually talking about, and then it can flow more organically, more naturally, and more conversationally. Does that make sense?
yeah, no, for
Just,
sure.
yeah, it does. And just one thing that I picked up on then, terms of trade.
Mhm.
So the importance of having a terms of trade,
Mhm. Let's talk to
like.
that. Let's go into that,
Mhm.
because not just having the terms of trade, what's in your terms of trade and how you use them and when you use them, right? So terms of trade are not the thing that goes on the bottom of your invoice when you send it. So terms of trade are a comprehensive document that go to your customer at the beginning of a relationship, whether it's a single project or an ongoing client relationship. And in that terms of trade, firstly, we're making sure we've disclosed it to our customers up front, that they've been given the chance to read and understand it, ask any questions, negotiate on any points, and to accept the terms of trade. And we need to then go and show that we have proof of acceptance of terms of trade. So whether that's an acceptance clause that says by going ahead and utilizing our services, you're taken to have read and be bound by these terms of trade. So we need to make sure that they are in play, because what happens is if there is a dispute or a non-payment event and it goes to the courts, they're going to want to understand, what did you agree to? At the end of the day, what can you prove that your customers have had disclosed to them, then that they've accepted and has been pre-positioned with them as how you're going to work together.
So,
Fantastic.
bookkeepers need terms of trade in place.
Anybody that's providing their services in advance of
Yeah.
getting paid needs terms of trade. Anybody that's subject to a dispute. So even if you've never had an issue with non-payment, if you are have financial liability in the work that you do, if you are taking on financial risk. So, for example, if I am a concrete layer, my component of a project might be 20 grand of $1 million project. But if because of my concrete isn't right, the whole structure collapses, that's on me. So we need to understand that it's not just about the financial repercussions of a non-payment, it's about our risk and responsibility that we have within a job and defining roles and responsibilities within that client relationship, as well as the legal frameworks for things like public liability insurance and making sure that we understand how they work together.
You'd make a fabulous concrete layer, I'd say.
All right. Mel, I'm just wondering, so what is the line between I'm sorry, I think I'm having some internet connectivity issues because the rain just started pouring.
No, you're
and I'm
fine.
having
Can
like
carry on.
delays. No worries, sorry. Anyway,
okay.
I was just like wondering. So where is the line then between bookkeeping and financial advice?
So legally speaking in New Zealand, you have to be a financial advisor if you are in the world of lending or providing insurance. So that legally is when you are a financial advisor. Outside of that, it's really about what is within the best and safest thing to do if you're worried about where you're crossing that line legally is to talk about things from a perspective of this is my take on it, this is what I would do, this is what other people have done, instead of actually giving blatant advice and saying this is what you need to do, this isn't my advice. And worst case scenario is that you put it in your terms of trade, guys. It's a disclaimer that goes in your terms of trade that says I am not a lawyer. I do not replace a lawyer or an accountant necessarily. So you are talking about it in such a way where it's coming from a perspective, not as advice, and you're talking about it from a perspective that you've already disclosed that you are not legally the expert in this field. Does that make sense? And also just plain old say, I'm not a lawyer. However, what I would suggest you could look at doing is this.
Yeah. Also on that, like referring them. So I find,
Yes.
well, I think that it's really important for bookkeepers to have that network, right? Like you should know a lawyer that you can use. You should know an accountant that you can refer people to,
Yes.
because if someone, or even an HR person,
Mm-hmm.
actually, I think that's the most common one. Because if you're doing payroll as a bookkeeper in New Zealand, you need to be really careful on the advice you're giving there and where that blurs between payroll and
Perfectly said.
HR.
And I think
Mm.
that's really important is to know your knitting. So there's a
Yeah.
degree we already talked about.
Oh,
we
I
already
get all
talked.
these cool sayings out of this. I love
Stick
it.
to your knitting. So if you
Yeah.
are a bookkeeper, inevitably you are going to be a counselor, a guidance coach. You are inevitably going to be a sounding board, and that's a privileged, blessed position to be in because that's an earned position. But we also need to know, even for myself, so I am not a lawyer or I'm not a contract lawyer. But what I can talk to is the practical, implementable real life scenarios. And to that list of people that I would suggest your bookkeepers are referring to is a specialist in credit control, somebody, whether it's a credit control agency, but also somebody that, they can pick up the phone and ask a question of if there is something like understanding what PPSR is, for example. I don't know how many bookkeepers have heard of PPSR, let alone the implications of how to utilize it in a business.
I know what that is because I used to work in law firms.
There you
So
go.
Okay, so for people like me,
personal, I
what
can't
is
remember
PPSR?
the second P.
Okay, cool. So in New Zealand, we have,
Security register.
yes, perfect. So in New Zealand, property
Personal property security register.
register. Yes, so in New
Yeah.
Zealand, we have an act which is called the Personal Property Securities Act. And where that comes into place is it's a registration that the government holds of ownership or financial interest in goods or an illegal entity. So if in New Zealand, if I purchase a car and I'm putting that on finance, that finance company will register a PPSR over that vehicle. And then if somebody tries to on-sell that through Trade Me, a person that's buying it can look up that number plate and see is there a registered security interest in that vehicle. So from a business perspective, what that looks like is if I am a scaffolding company and I've got my scaffold up on a big development site for 3 months, then I can register my security interest and ownership in those items on that site so that if that development project was to go into liquidation, what happens in New Zealand is that whole site gets shut down. So you'll hear people say, quickly go get your gear off, they're going into liquidation, because once the liquidators step in, anything on that site physically can be seized as part of the liquidated asset. So you need to be able to get your stuff off. And the way you do that is by registering your interest in those goods. The other part of it is using the PPSR to register a general security agreement at the highest level, the same level as a bank, so that if that business entity has assets that they own, you have the ability to secure interest in those assets in order to recover any unpaid money, which is completely valid, folks, because if you are doing $1 million project, a $500,000 project, a $100,000 project, a $10,000 project, you are providing funds. No bank is going to give you a $1,000, $10,000, $1 million loan without some correct paperwork and without some kind of security interest and without doing their due diligence and doing a credit check. So we need to be making sure, if we're going to get treated like a bank, that we think like a bank would.
Do you feel like PPSR is probably severely underutilized
It's
in New Zealand?
100%. But then so is
Mhm.
credit checking.
Oh, that's true. Fair call.
Yeah, credit checking, which is one of the most simple things you can do, is your due diligence. If you are going to provide if you are essentially lending a stranger money, you probably want to do your due diligence.
Do you think that perhaps the reason those two are not, like those two particular functions are not used, is because there's a cost to them? Because from memory, PPSR, you have to pay for the search, right?
No,
Like,
that's an excuse.
oh,
That's 100% an excuse. It costs $50 to do a registration, and if you are providing your services anything over $50, and it's a risk.
yeah.
It's about risk identification, right? So what where your risk sits, and so if you were doing a job and that job was to not be paid, could you absorb it? If a project that you're working on was to have the preferential payment clawback, have you heard of that?
I think vaguely I have, like, so it can put you higher up the
So
list
they're
of
in New
creditors?
Zealand, if a business goes into liquidation, a liquidator's report comes out and it's divided into two: secured creditors
Okay.
at the top, unsecured creditors down the bottom. Secured creditors are the people that have registered the Personal Property Securities Registration, PPSR. Unsecured creditors are everybody else. And you're right, it's a queue. What a liquidator can do.
IRD's at the top, right?
Yep. Banks.
Yep.
Yeah. And what a liquidator can do is they can go to this big knot. So you've got this many people that are secured, everybody else is unsecured. Anybody that was paid in priority over a secured creditor can be subject to something called preferential payment clawback, meaning the liquidator can go, that 30 grand that you were paid, they didn't pay their tax, pay it back.
Oh.
So becoming a secured creditor means that you are in a better position to avoid preferential payment clawback.
Do you not feel like, I feel like this conversation's made me just want to go out there and fix people's businesses for them? Like,
Yes.
I'd have no idea how to do it, but
If
if you
only there
just,
was a
like,
massive group of people called bookkeepers who had the ability to go in and
Yes,
influence all of these amazing
exactly,
business owners.
exactly.
no,
and
we're
and
gonna take credit for that, Ken, because we're
Yeah.
helping them fix everything.
Yes.
and that's why we're bringing in Mel to our upcoming conference, because I think that would be a perfect time to really talk about this information in detail, right? And hopefully start a movement, maybe.
Yeah,
Just like,
yeah.
yeah.
And I also think it is I can't emphasize enough how much of an opportunity bookkeepers have to influence businesses. It's, again, I talk about that pebble in the ocean. You're in a position already of privilege and of trust. And if we can help you to have better conversations with your clients, so they can have better conversations with their customers, we can genuinely make true change so that we don't have this continuous economic cycle of massive ups and downs. I truly believe that if we were operating more cash flow positive and people were paying a lot more in advance, then we wouldn't have such a big crash at the bottom of the hill in those downs, because a lot more people would have the money that they're owed in their pockets and be activating that in their business instead of running somebody else's business.
I feel inspired to become a bookkeeper myself, and that's saying a lot, isn't it, Ken?
Yeah. Yeah, no, for sure. So now, why don't we talk about practical strategies? Maybe we'll talk two practical strategies for the clients, and then two practical strategies as well for the bookkeepers themselves. So let's start with clients first, Mal. So like, what are then some practical ways to manage or reduce debt for the clients?
So there's two components of it. So one of them is the stopping the bleeding. And then the other is how do you deal with all these other people that are already kind of in that non-payment cycle? First and foremost, we need to stop the bleeding, right? So we need to, the three things we've already talked about, which are low-hanging fruit, which is to get the biggest deposit you possibly can, if not paid in advance. You need to invoice faster for a shorter due date. So that's one kind of group of strategic things that people can do. Another aspect is to have better conversations and be better communicators and set up roles and responsibilities more clearly up front, and to be firm but fair and do what you say you're going to do, and that the rules are the rules, whether they're a good payer, a bad payer, whether they're a friend, whether they're a stranger. This is just the way this business operates. So that's going to create a lot of positive momentum in a business if they just did those particular things. In terms of the non-payments that already exist, it's about identifying what you have in place with those particular people. Did they sign terms of trade? Do you have a personal guarantee? What are your pathways to seek resolution with those non-paying people? What leverage do you have? And understanding what's a priority in terms of are they an important customer, but they just haven't paid you? Is it a big job that you need that money for? So that just becomes a process of elimination, but also looking at what your options are, your pathways to resolution.
I think the other thing with that is making
Mm.
sure that everything corresponds as well. So, we were talking about a bookkeeper going in and reducing the payment times and getting the deposit, but your terms of trade need to match
Hmm.
what you're
Mm.
doing in practice.
And pay your bills faster.
Yes.
So, if we want to be paid faster, we have to pay our bills faster, truthfully.
Mm.
I pay
That's
my bills as soon as I get them because otherwise I hate owing people money. So if I've got the money there, then I just pay
yeah,
it to get
paid.
rid of it, and then I don't have to think about it again.
And so this is
So
the interesting thing, right? If we just look at this through a new lens for just a moment,
mm.
in life, no matter where you are in the world, we have this dual dichotomy. We have retail, restaurants, going to the supermarket, where we pay up front. We don't fill up our grocery cart
Mm.
with food and groceries and say, I'll come back and pay you next week. So we have this whole way of living life, right? And then we have
Mm.
all of our service providers, all of our trades, where for some reason we're not paying them. So what we need to do is we need to say, if we can pay on the spot up front here,
Mm.
then let's bring this market here. Because the other thing to remember is not only do SMEs make up 97% of our economy in New Zealand, the blue collar businesses, so our trades, are the most entrenched and the most in danger when it
Mm.
comes to how competitive their industries are, the cost of their work. Their margins are so small, and they're some of the most competitive industries out there. So it's really critical that we help where we can.
Mm.
Do you
But
find
Mel, what
that,
is the? Oh,
like
sorry.
the sorry, I was just going to say the BNPL movement, right? Do you think that that's I feel like there's a risk that people in business are going to fall into the buy now, pay later because they're in that cycle where they don't have the funds, but they need this to be able to do
So
this kind of
again,
thing,
this is
or
complex. So my son, when he was 17 and going to university because he was a young uni person, was the bank was already talking to him about overdrafts and credit cards. And
oh my God.
we have those buy now pay later things that people can do. So it's not just a business thing; it's a cultural thing. We are the way we do things is like doesn't really matter if you can't afford it; you can still have it, and you can
Hmm.
Mm.
figure it out later.
See, I struggle with that mentality because the way I was raised is if you don't have the money, you don't get it.
Yeah, but most
And so that's yeah.
so
So
that's an
thank you to my parents.
yes. Yeah, and so what happens is it's way, 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 way too easy for people to get themselves into trouble.
Mm.
And so, until we we place ourselves, okay, so you can then go, okay, well, then nobody will ever buy a house because we're going to never be able to get a mortgage.
Yeah.
So let's put things into perspective about, again, what is within our realm and what's outside of our realm, and spending within our means for a starter. So,
Yeah.
but then shit happens, right? I don't know when my toilet's going to break down and my house is going to be flooding. How do we manage that? So that's why, it's really important that we educate bookkeepers so that they understand how to have these conversations. So we talk about, well, there's a call out fee, there's a diagnostics time, and that's chargeable. And by the way, we do take payment on the day. We have our guys will come up with an FPOS machine, and they'll be taking at least a portion of the payment on the day. So, like, how can we help them to help their clients to have better conversations?
True. All right. So, Mel, you've mentioned earlier, like if we
Yes.
have the opportunity, like for example, with the supermarkets and the restaurants, if we can, if we have the cash or pay the tradies immediately as well. But what if the cash is tight? So, how should businesses prioritize what to pay or who to pay then?
Again, it's so subjective, right? I think probably there isn't a simple one-off answer because everybody's important. You've got to pay for the material so you can do the next job. You've got to pay the bank people because you need to pay the bank. You've got to pay your tax. But I know that businesses do sometimes get into a situation where they're robbing Peter to pay Paul, and that's why that's where it's like a weighing up of the risks. I think a better question is, how do we prevent businesses or anybody from ever being in that situation to begin with? And a large part of it is, to be keeping businesses being cash flow positive, to not be spending outside of our means, for people to pay their bills faster, so that we are more cash flush at any given time. And sometimes, if we're over an extended period of time operating in the red, we are technically insolvent. So any point in time, it's just going to take one moment to tip you over. And then the flow on effect from a business running insolvent means that a shitload of other people then don't get paid. So it might be that a decision needs to be made that I can't afford to be in business and I can't sustain it. And that's a hard truth. And I've had that conversation with business owners because they're stressed and they can't perceive it. But maybe it's it's okay for something to take a break from something, because all people are doing is digging a bigger and bigger hole and becoming more and more stressed. So, my husband and I have been in the situation where we've had to walk away from a house. We've had mortgagee sales on our house, so we've been there, done that. And sometimes you make the tough calls, but you know what? That gave us the opportunity to reprioritize our lives. We put our family first. We moved to the beach. We were renting a house. We were receiving income support for a short period of time while we made that transition. But then 4 years ago, when my husband got terminal cancer, we knew that we had all of these years together as a family where we'd put our family first. We'd made the right calls earlier on so that we weren't hanging on to scenarios that were outside of what was really safe and practical for us. And so this is when we go, okay, beyond what we think is right or wrong in our heads, let's think about what we want as people. If I was to die tomorrow, what really matters? And so how do we get you peace of mind? How do we get you joy? And if that means that my business is trading insolvent, has been for a long time, it's okay. Don't take it personally to say there's a next chapter. Life does not finish with this business.
I feel like you would take a lot of learnings from that situation you were in as well, though. Like, so obviously that was kind of, I imagine that was quite an ordeal at the time.
But everybody has a
But you learned
story.
from it. Yeah.
Everybody has a story, whether it's a cancer diagnosis. By the way, he's doing totally fine.
I was going to ask, that was my next question.
Yeah, he's doing totally fine.
Yeah.
Yeah. But, everybody has something. Life doesn't stop. Kids don't stop. So, again, the importance of having bookkeepers is it gives families some balance. Again, at the end of the day, we go back to our why. Why are we in business? So that we can own our own time, so that we can build our own future, and that we can do things our way, right? And leave a legacy. If you are in survival mode, that's not business. That's an anchor around your neck. So, it's really important that we figure out what really matters in life, and then we move towards that. And in business can be incredible. We get to have amazing conversations with amazing people every day. We get to create something that is going to make the world a little bit better. We get to be there when somebody needs us, but we also need to make sure that we're getting paid, and we need to make sure that we are cash flow positive. And, when businesses are cash flow positive, they are the ones that they are the people that are doing the local sponsorships. They are the volunteer fire brigades, so all of our communities benefit when our businesses are paid well.
It's interesting, because I feel like the other part of that is if you own a business, you need to be passionate about it, right? So I know we were talking about COVID earlier, but when COVID happened, lots of people lost their jobs. So they started a business because they needed something to do, right? And that's almost, well, I mean, it's not necessarily wrong, but it feels like the wrong reason to start a business because your heart's not really
Or
in that,
conversely,
driving it.
I think it's like they also say post-COVID, remember, we do have to remember that COVID dip only lasted for so long, and then we were into the crazy, not enough staff, not enough time, not enough materials, everything's going up, prices are going bananas. So that was actually the bigger impact immediately after COVID. And people got into business because they could, because there was more work on, then there was people to do the work. So what that then led to is a bunch of business owners that were good on the tools but had no idea how to run a business, so never put away money for taxes. So, yep. Yeah. So, you know what I mean? It's yes, you do need to be passionate about what you do, and there's a number of reasons why people get into business, but it's also making sure that you identify that you are coming back to those whys. At the end of the day, they probably went into business because they could see an opportunity to be able to earn money for themselves and own their own time. People don't just go into business because they're bored, generally speaking, and so what we need to be able to help them to be able to do is to understand the infrastructure that's going to support them to have the things that they want in business and in life.
I wonder if there's some fear as well sometimes, like, with the saying flogging a dead horse. If you're technically insolvent, you're owning a business and you keep trying, because the other side of that is, I haven't heard it on the radio for a while, but the unemployment rate is not unemployment. Unemployment rate is really high at the moment, isn't it? It's like over 5%. So there's no, you're in this business, you're not probably getting as far as you wanted, but I say this because I'm married to an Englishman, right? So he has this mindset. I'm doing this, I'm going to make it work because there's no jobs anyway, because the unemployment rate is high, kind of thing. Like, there's that mentality. I think the Kiwi mentality, possibly. Maybe.
No, I mean, it's a case by case scenario. So for us, we went on to unemployment for a short period of time because we knew we had to put our family first. We had to start reprioritizing what really mattered to us in life. And what that meant was that then we rebuilt our lives together, so that our younger son, who is now just about to turn 19, he has had one of us working from home ever since, because we were at a point in time when neither of us were at home. So, it's, what do you want out of your life? Do you know what I mean? Like, you can stay in business and keep flogging the dead horse. But I also know when businesses they stop caring. You know what I mean? So we have to help bookkeepers, can help business owners to be able to see, help them to see for themselves what's through the other side, whether it's through the other side of business recovery or it's through the other side of maybe there's another way.
You mentioned, so you've got 2 sons, is it?
Yes.
Yeah, just curious. Do they have credit cards? Or did they say no to the bank?
So, yeah, our youngest, no, he doesn't have a credit card, but he's also still learning about managing money. Our oldest does, but he's a lot more strategic. His entire life, we'd go out to a restaurant or a cafe, for example, and he needed to know how much he could spend, and then he would spend 10 minutes looking at the board to find out how he was going to get the most out of that $10. And so he's always been the kid who's been really, really good with money and keeping money aside. So, I think, look, guys, we have to talk about money. We have to talk about money with our clients. We have to talk about money within our families. We just have to talk about it. Money's great. I love money,
Yes.
Especially when you've got it.
especially when you've got it. But do you know what I mean? It's also not a scary subject.
Yeah.
You know, it's something that people feel nervous and anxious talking about, and we just need to get comfortable with it because it's part of life.
Exactly. And I think
With
once you get
my
the hang
kids,
of it as
like
well.
I
Oh, it's just like it's
Ken, you've
really
got
my
a
audio
lag.
said, yeah, I know I've got a lag. So it's like I talk, but then like I think my audio comes in when you start talking. So I'm just like this really rude person interrupting you right now. But I swear I have a lag.
All right, the floor is yours. Go.
No, I was just gonna say, no, I actually am like a fan of like credit cards and stuff like that, because as long as you are learning more about like financial literacy and stuff like that, like there's nothing to be afraid of. Like as a matter of fact, if you just pay your credit card bills on time and stuff like that, you can use them to your advantage. It's so amazing to earn a lot of points and actually use them to your advantage as long as you just know how to manage them.
And I think that you're well said, Ken, but I think you would find you were in the minority. I think most people are leaning onto them because they're overextending themselves into what they actually can't afford. So you're
Yeah.
right. My son's the same. He uses the interest free on store cards. He uses the interest free because it's
Yes.
free money. And that's great because he's well disciplined and he'll pay it off before the interest kicks in. Most people can't and don't.
Yeah, I'm on the flip side of that, Ken. Like, I don't have a credit card and I deliberately don't have one. And I think it's probably because my parents gave me that mentality. If you don't have it, you don't get it.
You can't
Yeah.
afford it. Mm-hmm.
Yeah. So, but also what I was going to say was like, I found that really important with my kids.
Mm-hmm.
So I'm quite clear with them when they ask for something. I say, I explain why we can't afford that. Like we have to pay for this and we have to do this. But the really cool thing I found for them is we use the Square One app.
Mm-hmm.
So they get pocket money and like they're quite excited, but it's like 50 cents per task they do. So it's minimal to us, but it's teaching them that, well, I feel like it's teaching them that they need to earn the money that they have. And I've got one kid that's quite similar to you, Mel. Like she will calculate the most she can get out of that money. She's got so much in her Square One because she actually overthinks it. She doesn't want to spend it because then her balance will go down. Whereas the other child is like, oh, I've got $20 in there. I'm going to go
Let me
buy
guess,
this.
is the one good with money puppy and the one spending Lenny?
No. Yes, absolutely. But giving them that early on, like I feel like that's really important because I felt like I was saying to them, we can't afford that. We can't do, because Lenny, my youngest, Ken loves Lenny stories. She's got expensive taste and I don't know where it came from. And so kind of giving them that like, this is what we need to pay for our house so we've got somewhere to live. We need to get our groceries. So that's why you need to prioritize these things over, the $100 bracelet you want or something crazy that she's found kind of thing. So, and I feel like I remember I grew up with my mum balancing the checkbook at the table. So I had that exposure and that mentality, obviously, that they gave me.
Absolutely.
But none of the kids at their school, at my kids' school, kind of have that
Financial literacy.
Yeah, and I'm just like, why?
We just don't talk
Like
about
you
it.
could teach them all the algebra and all that like crappy maths that you'll never use later on in life, but tell them how to manage their money.
Yeah.
Exactly. And again, this is where our bookkeepers can become a conduit or a mechanism for those conversations. And the better educated they are, the more empowered they are to feel like they can approach it from a way that feels natural and organic, but also to just bring it. I mean, look, it was like with my husband's cancer recovery. The more we talked about it, the more people came to us with what they had done that had worked for them. And now my husband's, he's fine. And not everybody gets to make it through. But if we didn't talk about it, there would be a number of different things that we wouldn't have done that ultimately saved his life.
Yeah.
So
I'm so glad he's okay, by the way.
Yeah, no, same here. So I just want to ask as well, Mel, if you have any practical strategies for the bookkeepers themselves. Like, for example, how do they manage the stress that comes with supporting struggling clients?
So I think something that's really, really important to remember is that bookkeepers often by nature are nurturers. So what that basically means is that they have massive hearts and they tend to take responsibility for everybody in their world, which makes them great at their job because they pay attention to detail and they care. However,
Yes.
something that's really, really important to do is to be able to have switched on, switched off time. Use your do not disturb button on your phone, and make sure that you set out particular time frames around how you operate. And just like with every business owner, we teach our clients how to treat us. And so if we don't teach them boundaries right from word go, if we are constantly available 24/7 on demand, then people will call us 24/7 on demand. But
Yes.
if we, again, it's like that whole parable about the loaves and fishes thing. If you teach a person to fish, they'll have food for life. So if they can then teach their businesses, because they are educated and confident in themselves, then they're empowering the business owners, so they're not relying on them, except for in those areas where they specialize.
I think one other way of
Yeah, you're
managing
right
the stress.
about bookkeepers having so much empathy. Oh,
Yes, you're right, and it's you're right. It's the nature of our amazing support. A lot of people that are in the support world. Look, not everybody out there is what I would call like a dove nurturer. Some of them are kick ass. Will take no shit from anybody, and they just make shit happen. And they are machines, and they're worth $1 million. However, balance, folks, because those people are also the ones that find it difficult to turn off. But it's really important they do, because life is not a race.
Yes.
yeah.
Yes. I was just going to say, and I think one way of managing the stress as well is to bring in, bring in experts like yourself. So, could you please tell us, when should a bookkeeper recommend bringing in someone like you, Mel?
I think at any point in time where they are stepping, I mean, it's the same reason when we defer to lawyers or we defer to an accountant, is that when they feel like they are getting into a realm where they feel uncomfortable, or they can see that an extra perspective, it's like the kids never listen to the parents, right?
Can confirm that's true.
But if you bring in somebody else, that's again one more degree removed. I can be saying the same thing that they are saying in a slightly different way, and the business owner will be able to digest it or not. And it's also if they themselves feel like they need a sounding board. So it's not just I need a sounding board because my business owner needs a sounding board. I need a sounding board. So if they are feeling like they are overextended and working in a space where they want to be more empowered, they want to have a better understanding, then that's when they would call in someone like myself. But also if the business is at a point in time where they are regularly in a state of people not paying them on time, if they can see that their customers are maybe paying but they're taking a very long time to do so, or they're seeing non-payments, or they can see that businesses are struggling to pay their bills. If they can't pay their bills because they haven't been paid, that's a prime time to bring in a specialist.
And what does working with a financial coach actually look like? What outcomes can they expect from you?
Okay, let me check my notes here, because I'm talking about myself. It's always hardest, right? Okay, so what can they expect? They can expect to, because one of the key ways that I help businesses is to provide workshops and accelerators and learning and training. So they can expect to be in a room with other people going through the same thing, and you become part of a really, really powerful and amazing interactive conversation. So what I am is a facilitator in the learning. So we take people through these key learning points, but we also create an environment for real conversation where the business owners are having real conversations with each other and learning from each other as well. So it's community, it's clarity. So some of the things that we talked about today, a lot of business owners don't see themselves as a bank. They don't realize that they are actually providing free credit. So they don't treat themselves the right way when it comes to how they provide that credit. So they'll gain great clarity, they'll gain great perspective, they'll gain tools and understanding about things like PPSR, further understandings about terms of trade and when and how to use them. They also gain somebody that they can call on when the curly stuff happens, and somebody that they can lean to if they are looking to help themselves transform so that they can provide that transformation for their business owners.
Do you find that having that in a group setting is like there's that whole kind of, I guess for bookkeepers, they're quite siloed because they tend to be introverts and working on their own.
Mm-hmm.
And I feel like when you're a business owner under that financial stress, you like the default, the human nature part of it is to be like, oh my God, go inside yourself.
Mm-hmm.
When you come into a situation like that with a coach and you see that other people are
Mm-hmm.
experiencing the same
Yes.
problems that you are, do you find that gives them like a little breakthrough? Like, oh,
Yes.
it's not just me,
Mm-hmm.
and now I've got someone to talk to?
100%. The value of being in the room and who you are in the room with and the conversations that you have. So what it looks like is we firstly make sure that we articulate that it's a safe space and that what happens in these spaces stays in these spaces. And so what that creates is a space where people can be really open and transparent about what's really going on. And so my role is to lead through that education and training, but give themselves permission to actually talk about it openly for the first time. And I mean, I was in a workshop yesterday and with a woman that's been in business for 6 years, and she's an incredible business operator. But she said just being in the room with other people going through the same thing instead of having everything in her own head was such a relief. And so I work in the way that people work with me, and what it looks like is that we have a workshop, which is a taster. That's a 3-hour workshop, and I will do that for industry groups like the Bookkeepers Association or within communities. And then I also do an accelerator, which is a 6-week deep dive where at the end of it, businesses have an actual implementable personalized infrastructure that becomes the way they manage their credit and cash flow risk in the future. And then we also have the ability for people to work one-on-one with me, but a good starting point is with that base education and clarity.
I'm never sure if Ken's going to talk before me, so I keep waiting now.
Yeah, no, Sandi, no, I was just gonna say, I'm gonna put you here on the hot seat, Sandi, and I'm actually gonna pass over the quick fire questions with you. It's because I'm just thinking if I'm having all of this audio lag, like it's not gonna be a quick fire anymore. I don't want to give Mel time to think. Yes, because we've actually prepared some fun questions here for you, Mel.
Amazing. Thank you.
Yeah, so to explain that, Kenn loves doing things like this. So Kenn has an events background history, and in the Philippines, they do fun events, and they like to put people on the spot. So when we were talking about setting up a podcast, she wanted to introduce that to our podcast guests.
Amazing.
So I feel like I can't do this justice, but we've come up with some, Kenn's come up with some quick fire questions.
Mm-hmm.
So it's a bit of this or that.
Sure. Let's go.
And from last time, I remember Kenn's instructions were to just answer quickly and we'll move on.
Sounds good.
So there's only a few. All right. Early start or late night?
Late night.
Coffee or tea?
Tea.
Oh, love that one. Accounting software or spreadsheets?
Spreadsheets for me.
Really? Mm-hmm. Okay, we might have to come back to that one. Work from home or work from anywhere?
Work from anywhere.
Ooh. Structure or winging it?
Middle ground.
Oh, really?
I'm a structured, unstructured person. I prepared for today so that I could talk on the spot.
I love that. All right, and then we've got some finish this sentence. I feel like I'm not doing this justice, Kenn. You're going to have to fix it.
No, you're doing well.
The best thing about running my own business is
owning my own time.
Ooh. The hardest thing about running my own business is
valuing myself.
I wish more bookkeepers knew
that they are critical and that they're important and that they're precious and they're so valuable.
Oh my gosh, like just time out here. Mel hasn't seen these questions and you're doing an awesome job answering them straight away.
Especially to finish the sentence. That's hard.
Yeah. All right, I've got 2 more. If I could go back to day one, I would tell myself
that I am pretty amazing and that everything's going to just work out perfectly.
Oh, you almost stumbled on that
I
one.
did.
Success for me looks like
Success for me looks like not only owning my own time, but owning my own revenue so that, we all have, I think it's really important that we talk about money in a positive way. Money's a great thing, and the more of it we have, the more of it we get to share, and the more of it we get to use in amazing creative ways. So definitely financial abundance, as well as owning my own time and being able to leave a legacy and really change the world for real.
Yeah. We're starting a movement. We're going to think of the name
Yes.
of it after this. We'll get back to it.
It's happening at the conference.
Yeah.
Exactly.
Yeah.
All right. I've got one final one for you, Mel, if that's okay. If money
Sure.
stress had a personality,
Absolutely.
how would you describe it?
What was that? Sorry, if what?
If money stress had a personality, how would you describe it?
Oh, a thief in the night.
Oh, interesting.
Yeah.
You have such good analogies. I love this. We could yeah. Ooh. I can't believe I missed one of the questions. Sorry, Ken, I failed on you.
No.
All right. Well, we've been talking for a while now. So we'll wrap this up with one final question, I think.
Sure.
I feel like the whole time we've been talking about the negative almost, like all these
Yes.
increasing costs and all that
Yep.
carry on. What is giving you confidence right now, even with all the world events affecting things? What's your confidence factor?
Businesses are ready for change.
Oh.
Yeah, sincerely, they're ready to take back the reins and to be part of the movement, as it were, sincerely.
Are you seeing a lot of that in people that are coming to your programs then as well?
Because the thing is as well, I use this analogy of it's like once you've opened the curtains and seen behind them, it's hard to close them again. So purely by having the understanding of where does this 20 of the following months come from, and you're like, well, that's such a redundant structure. I'm not doing that anymore. Do you know what I mean? It's just like a light bulb switch gets turned on.
I feel like the light bulb's a bit delayed there, because didn't they stop doing checks in 2023 or something?
But that's the thing about these ingrained norms. When delayed payment, when being held to ransom to get paid, being dictated to about when people are going to pay you, it just becomes these entrenched norms. And I think the thing that gives me the most joy is people are ready to reclaim their power over their money. It's their money. It's your money.
Yes.
And if you don't want it, give it to the rest of us.
Yeah.
Love that.
All right. Well, we will. Thank you so much for taking the time to chat with us today. I feel like we've had lots of practical stuff, and it's really timely with, newspaper headlines, fuel crisis, et cetera. And we hope that our listeners will take a lot away from it.
Thank you so much for having me, guys. And thank you to your audience as well.
Yes, thank you so much, Mel. And if you want to learn more about Mel and the work she does, head to melcurwood.co.nz or find her on Facebook, Instagram, or LinkedIn.
Beautifully said.
All
Thank
right.
you, Ken. Thank you, Sandi.
Thank you so much for tuning in. We'll see you on the next episode. We won't see Mel, but we might get her back to talk about some of these other things at another date.
Take care,
And
guys.
if you can't get enough of Mel, make sure that you join us for the conference and see her there in person.
Thanks for tuning in to Behind the Books with Kenn and Sandi. We hope you enjoyed diving into the world of bookkeeping with us. Don't forget to check out www.nzqba.co.nz for more insights, resources, and updates. Until next time, keep crunching those numbers and having a laugh along the way.